Oh, already. Good evening.
Good evening.
So let me check if there is an stop live stream. No, there is not possibility. Always I check if it's possible to with the webinar on Facebook, but it doesn't allow me anyway when the meeting reach capacity. Okay. Okay, perfect. So let's check here. And thank you, Esther, to be here tonight.
Thank you for inviting me.
So let's try to share first of all the PDF, and we will explain to you. Thank you to be here today. We will explain to you two different projects that we have in a short-term rental and in a luxury property. It is why it's different. It's completely two different mortgage, and it's a pleasure to have you here. Like this, you can explain to us how it's working and all the advantage and inconvenient and what we have to do and what we don't have to do. So I will starting. Okay, I don't know if you can see my screen.
Yes.
Okay, perfect. So if you can just here. And I try to put on Facebook, everybody that was working on Facebook, you cannot see the PDF, but obviously you will have the PDF directly if you send a DM to us. We can have the PDF and all the explication. And like a bonus that we have in the advertising, you have a free consultation with Esther to be approved, to be or to know exactly the loan that you have to do, which option you have to do, and what you can do in your situation, in your own situation. So this is a meeting 101. Don't hesitate to send the link to us and on the DM to us. We will send you the link for the meeting. So let's starting uh, Esther with the situation. I'm Fabrice. For the people that they don't know me, I'm working with High and Say Hand in New York City and Miami, and we are doing real estate, luxury real estate, and I'm specialist essentially in an investment international. So you can find us obviously on the website, and I will put to you. Let me check. I'm not a very good specialist. Let's see. Okay, the link of my calendar. So an electronic calendar. So like this, if you want to just take an appointment with us one-on-one, you may appoint here. I search the calendar. Okay. Just here on the chat. I will put it on the chat, the link. So just click on the link below, put your date and your house at your convenience. This is directly connected to my electronic calendar, so we can take an appointment one-on-one and make the analysis directly of your own situation. This is the bonus, and we can do completely free. So don't hesitate. Click on the link of the calendar. It's completely free. So you can have analysis with Esther. Is the really professional that all the situation that you can have, and I will explain to you. She will explain to you tonight the non-QM mortgage and the jumbo mortgage. So this is two different mortgage that she just explained to me this afternoon. I was not, I don't the knowledge for the two difference with the convention and non-QM, so that you will explain to us, Esther, specialist from the loan. Esther, can you just present you and say some details what you are doing?
Oh, yes. Good evening. My name is Esther Acosta, as Fabrice says. I'm a mortgage loan officer. I had um, I had a bachelor degree in accounting and finance, and I was an auditor for 20 years in my country of birth, Cuba. And then I arrived here. I get the similarity with my degree in Cuba. So I started working as an accountant, and 5 years ago, at the same time, and I still work as an accountant, I study in the mortgage world because it is very related. And my background uh, guide me to and serve me as a base of point of contact, a point of contact to the mortgage world. So I started in a retail channel, and 2 years ago I flipped to the wholesale channel. So now my company is a mortgage brokers. We have relationships with more than 40 banks, so we are able to tailor a loan according to the financial needs of each client because each client is different. So that's my background.
I completely agree, sure. So what we're able to buy my first rental property, this is the development that we will check tonight. And on the two side, because there is so many questions that we heard at the most, it is how did I get into the real estate investing? How I'm doing? I don't have a lot of money, but I'm very motivated. I just have a case start this afternoon with an investor that the guys at the end say, I really want to invest. Of course, I'm not a billionaire, but I want to be. So, and it's possible. It's possible. Real estate, there is a lot of people that making billionaire when you do it smart. This is the point. Doing smart, what is it? We are here to answer at all your question and don't just here to explain to you to do not the mistake that we did before and most people did it. So the new development, that is a solution for the first investment. This is what we will say, or this is the resale property. That is this a better thing. So this is very, very difficult because like you say, just Esther, and thank you for say this point, because this is the more important. So at the moment that you want to invest and you have whatever amount, and you want to invest, but you don't know. Obviously, when you have $10, it's more easy to make $10, and you have $100, it's more easy to make time $100. It is exactly after when you are growing the investment and the price. When you are making 1 million, it's much easy to make 1 million more. But step by step, you can do it. And with the good team, because this is a team, believe me, it's really a team, Esther, because we are thinking that we can do it alone and we are alone. No, if you stay alone, this is not the key of the success, I guess. And I saw, because at the moment that you have really because when we give you exactly the person that he have on one-on-one appointment, that he has doing the analysis and he has making all the number directly, if there is a solution, you can bring it directly to the specialist, to the appraisal, to the inspection company, whatever. So all the specialists. So it is. I mean, that is really a team that we have that at the beginning, because I think it's my opinion that at the moment that you want to be alone, you can do it, but you need more time, and but with a team you can do quickly. This is my opinion. So it is
Exactly.
yes, so it is why which new development we have to choose, or which resell we have to choose, short term, long term. So many people are saying that is better short term because it's make more money, whatever. We will see, and we will discussing this tonight. So what's happened to if it's happened something, if I'm dying, if I'm during the purchase, after the purchase, before the purchase, this is some things that we can see with in more deeper. I think with the attorney, because this is some point that is very special. But what we will discussing tonight, why the new construction is a strategic, flexible investment, because people say it's very difficult to buy something in the new construction, because this is something that we don't see. There is nothing. There is only picture that the developer is a good guy. That is a good guy. That is recognized by the market, whatever. So this is all the question that we will try to answer tonight. Getting comfortable with the real estate investing and the mortgage, jumbo or conventional. I did a mistake when I did a PDF, because I didn't know that there is these differences there. And thank you to bring this one on the table this afternoon, because at least we learned something, and you will learn something on this webinar as well. So conventional loan or jumbo loan, new development can be a solution. Let's see and develop this really two situation that we can have, because at the beginning when we want to, I don't talking about the flip, but when we are making real estate and some investment, usually this is for early retirement, traveling with the money that we can have, and the plus money, I say, or whatever activity that you can, is really to make profit. So pre-construction real estate, we saw that there is two advantage, Esther, with the new construction between the resale. So
Yes.
Yeah. So pre-construction real estate equal leverage plus time. And can you say something about that? Because you explained me something this afternoon that is really that again with the team is better because it's really something that we don't thinking and you think about it because you're a professional. Can you explain that, please?
Yes, of course. For example, when we buy a resale property, that means that is a property that is already built. So for that time, you need to have certain requirements that if you don't have it at the time you are being um, evaluated for a or pre-qualifying for a pre-approval letter in order to be under contract for certain property, if you don't qualify for those requirements, you cannot enter into a contract. You'll have to first amend or fill out all those requirements that you need to have in order to be able to apply for to be approved for a mortgage loan because you don't have it at the time. With the pre-construction, as you fill the contract in when the it's better to sign the contract in the early stage of the pre-construction even before the groundbreaking because that allows you to pay less money for the property.
Okay.
As long as the property has been completed, the price goes up. So if you sign the property in the early stages, if you sign the contract in early stages, the sale price would be lower than if you sign it, for example, when the building is in the third floor or fourth floor or top off or completely terminated. So the mortgage would be um, you will be approved for a mortgage loan when the building is terminated. But but if you know when you sign the contract what the requirements you need to have in order to be approved for a mortgage loan, you have 2 or 3 years, the time the building is completed, to work into it. So you have enough time to fulfill all those requirements because you are already on contract. So you need to be able to get approved for a mortgage loan, but you have time to fill it out, to complete
Yes.
of those requirements. Yes.
Okay, so if we go ahead with a new construction, for example, let's see, I like this new construction and I'm very interested, but I have only, let's say that the price for the unit is $500,000 and I get on my bank and on my own money that I earn only $100,000. Let's see. So I can and I have the capacity, of course, to make a reservation for the unit. Great. I have the capacity to make the several payment that is required. Great. But the approval, if I say I want to be sure because I want the approval before that the building is built. This one, never mind. It's not possible. Right?
Exactly.
Okay. So you only on your hand, you can prepare these people to be sure to get the rest of the money in a loan during the process that the building will be built, right?
Exactly.
Okay, so this is the point. So that is very, very good things that we have to understand. And in the new construction, the advantage that it is, sometimes we have to reach, I don't say sometimes, and it's not because we are a destination. You have really to reach a professional because you have some project that the price is flying. And so with the calculation, for example, that we have just here on this plan, the example for the ROI, the higher ROI is the return of investment in the pre-construction is very, very dedicated because it's, again, on something that it doesn't exist. So at the moment it doesn't exist, you have to take the average price that this is on the area, and it's very difficult because sometimes we know that Miami, those buildings are old. This is completely new from 2, 3 years ago that there is all the building popping up and coming from the new construction. So all the comparable that we have, I mean, that this is the comparable that is might be not a comparable because is on the old building, and now with the older building, we have with the new technology, with the brand of car, with so many things, you know. So this is really the things, but the appreciation that we are sure and 200%, this is the appreciation that the moment that you buy the unit until you get the unit, I guess. So this one came to you, and we will see in a little more after, by the initial deposit that we put here for on this example for $100,000 for the people that they have on Facebook that they don't see the PDF. I invite you to send me directly your email, and I will send you the link for the video because the webinar is recorded. So for some people that they cannot see it, I can send you by DM or by email just the link of the video. So this example, Esther, is what for $100,000 that I have in my bank. I purchased a unit for $500,000, and the appreciation is about 30%, and the final values is 650. So the ROI on the cash is 150% before the closing. After, whatever what you say, the value of the property can get 30%, but if you did a mistake in your financial situation, you can get 30% per value, but you cannot get the approval at 100% if you are making a mistake, right?
Exactly.
So
Exactly. And just to point out here, Fabrice, this appreciation, as everybody should know, the real estate market is very local. So we are talking about Miami. Miami appreciates, I believe, if the one of the highest appreciation that we can find in the US.
I think so.
Yes, because it appreciates a lot year after year. So that is why to buy these properties in the early stages will assure you as high as this one, because as cheaper you buy the property, when that building is terminated, it will cost a lot more.
Exactly. I can get an example that is a typical example. Look at the Mercedes-Benz tower over there in Brickell. At the beginning, when they are launching this tower, the first studio was at $655,000 the first day. After 1 month, they sold 101 units. And the price now, because there is not a lot of unit available, that I'm talking about the studio, obviously, that's there is the lower price, it's 755, and it's only 1 year that the towers will be launched. So
Exactly.
you see, I don't have a crystal ball, but I cannot say obviously that it will in 1 year your unit will get $100,000 more. But this is a typical example that how Miami become, you know. So let's continue with the two projects because I took two projects next time, and this is exactly what I took these two projects first of all because I love those projects, honestly.
Yeah, me too.
I love those projects, and the other one, this is exactly the typical situation that we want to explain to the audience today. What's
Yes.
happened? We have on the side the rider, like you can see directly on the screen. The rider in Wynwood, in this, yes, is a South Midtown. So that is a new project that is just here. We will see the location on short-term rental property, but you can leave too. You can take it in a residential property, but most likely is a property, is an investment property, because at the moment that you have short-term load is not very, very nice to live, you know, because there is a lot of traffic every single day. Is more something that we can make money. First thing,
Exactly.
this typical project, you can get exactly a special loan that you was explaining, Esther, that is completely different that you can have in the Pagani residence. Pagani residence, everybody know Pagani. Pagani is something so special that the price starting for 2.9 and go to 12 million. The difference, like you see, 500 and 1.8 and 2.9 and 12.9. So we have two different loans that Esther we will explain to you. That we just saw at the beginning of this PDF that there is non-QM loan and jumbo loan. This is exactly the mixed loan that we have here, two different loans. And I will explain to you first what is the typical residence. Like this, you can understand and see that if you see another project that you like better than this one or the other one, if it's the same criteria, you know which loan you have to get for this project. And so you will know the requirement because Esther, we will explain to you exactly what we have to do, because not what we have to give, what we have to do, because giving the paper or giving the document or giving whatever, everybody can you send a list and that's it. But explain to you what you have to do to get it is completely different, is a challenge.
Yeah.
So let's see or deeper and see the rider. What is it? So the rider, you know, the really good the project, Esther. So look that let's see and see at the beginning what is the rider.
Yeah, I love it.
I know
The rider,
I want to explain at the beginning, but finally I leave you explain it to you to the audience because I know that you love this project, and
yeah,
you know much better, I guess, that me.
yes, the rider is a residential unit, a residential project, is a condominium residential. It's not a condotel, it's a condominium, regular condominium, but with the particularity that you either can leave your property or rent it. You can rent it short term or long term. So that's the feature of the rider that makes him unique because with most of the projects, either you rent it out or or you live, but there are not a lot of projects that are mixed use, and this is one of them. And some of them are mixed use just for living or rental, but not for short-term rental. And this has either long-term, short-term, or you can leave your property the whole year if you want. The Rider is a building that has 146 units in 12 stories, in 12 floors, 12 stories.
12 stories
So
is a smaller
12 stories.
units. Yeah.
Yeah, it's a boutique building. So the HOA is 135 per square feet, which is very cheap.
Yeah. Very
And it will be completed by next year.
wow. Great.
Yeah. So we have to act fast. So as all of these new construction buildings, they have rooftop pool, gym, co-working space, valet parking. With as we already said, ownership and rental are flexible. You can either rent it yourself or hire a property management company or put it in the in the building program to manage the units. It's up to you. And the starting price, when it started, it was at 500. In our example for today, we took an unit that will cost $600,000. So you can see what are your possibilities on that one.
Yes, exactly. So this, like I'm telling to the people at the beginning of this webinar, this new construction project is located in South Midtown, just a minute from Wynwood and the Design District. Like you said, it's short-term rental load. So it means that you can rent by Airbnb, you can rent by VRBO, Booking, Expedia, whatever platform you have. There is no restriction. You can manage it by yourself. If I remember, there is also a property management company that it will be on the place and can do it for you as well. And the unit is fully furnished. That is very important for the short term. What I mean? It means that at the moment that you buy your unit and you make the closing, that the closing is done, the day after, no restriction, you can rent it, you open the door, everything is full furnished, and you can start in directly. So
Exactly.
yes. So floor and ceiling windows, rooftop pool, gym, co-working, like so many new construction today. So like you can, of course, comparable at the old buildings. Sometimes there is no gym, sometimes there is no pool. Yes, guys, sometimes there is no pool. Even in Brickell or Wynwood, it can exist. It's not only in South Beach. So co-working space, valet parking, flexible for the ownership. What do you mean valet parking flexible for the ownership? Because when you are the owner, you might be and get an advantage to go directly to the parking or to use the valet parking. But at the moment that the guests are rented, this is valet parking. And like I was telling you, rental management is an option, is not mandatory. Why so? You will explain to us why invest in the rider. So in the rider, I just told you exactly. So turnkey rental income potentially the top performing area. This area that it's just on the middle. You will see on the map. I just took a screenshot for the map to be located and see what do you have. But again, by the way, if you want more explication and more detail, we can explain to you everything. Takes only an appointment 101 is completely free. And the bonus today, and it's today for the people that they have this webinar only, that they only have to say the date of the webinar and they have a free consultation with Esther to get approved by a loan, jumbo loan, commercial loan, whatever, depend of the property that you want to buy. She will directly put you direction and the way on the good product and try to get an approval quickly. It's not mandatory. You can do it only for information. It's not obviously, it's not because you want to buy the apartment tomorrow, but you can want to buy the apartment in 6 months, but they can make the analysis for you and with you to be sure that you will be approved at the moment that you want to buy. So workable location near the shop, restaurant, and entertainment, low entry price for Miami new construction. Exactly. So this is the point. This is the point that we can have a non-QM for this property, Esther. But this is the other point that the price is wow. Because I don't think that there is another project that it is so lower price than this one. I'm talking about in short-term rental, correct?
Yes.
Yeah. So future growth with midterm expansion, of course, and delivery quickly because it's on 2026 next year. Reserve now with a flexible payment. We will talking about and the details for the flexible payment. And we already say some tips just before. And so we will explain exactly to you what you have to do if you want to buy a typical property that is the rider or the other one. The other one is completely different. Let's go in and more deeper, and I will explain to you. So fully finished residence, spectacular kitchen, of course, smart lock, keyless entry. This is better and more easy when you are doing short-term rental. All is new, porcelain plumbing fixture, high efficiency washer and dryer, private balcony in most residences. Not all of the property on the rider get the balcony, but almost of this one take a balcony. Let's see the difference, and after I leave to you, Esther, to get more deeper in the difference for the mortgage when I want to buy a typical property in a short-term rental like the rider, or another one that is like this one, that the Pagani. Pagani, everybody know, driving a Pagani is a nice car, and there is no resident. This is the first residence, exactly, Pagani in the world. The price starting at 2.972 until 12 million. The address is 7940 West Drive is just in North Bay Village, where there is the development from Shoma Bay, Continuum, and more that it will coming. You will see because North Bay Village will starting very, very, very nice area. By the way, like you can see on the picture on the right, North Bay Village is exactly the location when you can, if you put your boat or whatever, jet ski or whatever you can put your yacht there, there is no bridge to go to the sea. This area, this is amazing. So 7940, the developer Riviera Horizon, architect Revuelta, interior design A++. So we are in the luxury, and you see only 28 story, only 70 units. The average for the square footage of this unit is almost 2,000 square feet until 3,300. It's showing $1.75 per square feet, and it will finish in 2027. Like the developers say, or the in-house agents say, I guess it's at the end of 2027, delivering in January 2028. Let's continue and see the residence. So flexibility. This one is a both information about the project Pagani, but both information get by if I want to buy in a new construction. Very, very specific. Esther, I will ask you just after the mistake that the investor that I have to make, because the first that we just mentioned before, the advantage from the new construction, this is the flexibility. You don't get in the market. You can assign, sell before the closing in some project, not all of them, guys. Holland is not only like that, but I saw sometimes some developer going to the before the groundbreaking, and I saw it at D-Rider. So, and that buy a property before the groundbreaking because they know that the price is very, very low. And they will, of course, the price will growing because less unit that there is available, more the price data will going up, of course. And after, so resell this property or after the closing, if it's not possible to assign the property during the process, but usually you can with a company. So if you buy, usually when you get an investment or when you want to do an investment, usually you are buying with a company. So you can sell the company. So you can sell obviously the unit directly to the other person and assign. Can explain the montage that you can do when you want to invest. So why do people say always, I like it because saying, when is the best moment to buy? Now. Okay. When is the better moment to sell? Now. It always is now, you know? So, but we will explain why is really now in the new construction. But guys, is really now. Again, I will put the calendar because you have to really, if you are interested, take an appointment with us. It's very, very important to explain to you the A to C because it's very important. Why now? Because supply is limited first. I saw exactly, and again, with the 1,000 Brickell, that the price was low. The guys want to buy it. He didn't, and he don't want to buy it. So he wait. He said, no, I prefer to wait. And 6 months after, the price rising for more than $50,000. It was so crazy because the capacity that he can before to buy this new development, he cannot today because $50,000 is a lot of money. And sometimes when you have to put $50,000 more and you have only $100,000, it's completely different because we are at 50% of your capacity. And so at the end of the day, it's not possible to do it. So get a professional. We are here to help you. We are not here to push you. So it's very, very important that you are a professional, that he make all the analysis with you and see exactly if it's the moment for you or not. Construction cost is rising. Interest rate will adjust soon. So this is what you explained to us, Esther. Let's go to the mistake that we cannot do and the interest rate. Can you explain, please?
Yes. When you are ready, when you have all the requirements to be able to buy a property, a real estate property, buy it. Don't rely on interest rates because interest rates are always changing. And even when you see in the news that today's rates are, like example, 6.83, it doesn't mean that that interest rate applied to you because you have a special characteristics. Your financial situation is different. The interest rates depends on so many things, depends on the type of property, depends on your DTI, which is the relationship between your monthly income and your monthly debt, depending on the amount of the loan that you will be applying for. So there are so many factors that define the interest rates that you don't know until you are pre-evaluated until you are in the pre-qualification process.
Sure.
And even then, that interest rate is not fixed until you are under contract and until we lock that rate. And always you can buy down points if you have the funds to get a quarter of point less or something like that. Well, you can do it. So interest rate doesn't define anything, because today is high, but tomorrow when they get lower, you can refi. Just
Exactly.
that simple. But
Yes.
you have your property. If you don't buy it today, your property, because the interest rate is high, tomorrow, when the interest rate gets lower, your property will cost a lot of more, because there are more people demanding that property to
This
be
is
approved.
this is the appreciation during the construction. So
Exactly.
during the construction, you are sure that there is an appreciation because more unit, and believe me, the in-house agent is here to sell it, the unit that he was inside the building. The developer is here to sell the unit as well. And there is an army of realtor that they go to the sales center or everywhere to sell the product as well. So what's happened? It happened that more the time passed and less the unit get. So it is why you have an appreciation, because less product you have, more expensive it is. It is why always you can waiting for the resale, that the price going down and that then up and down and up and down in the real estate for the cycle of the real estate is not making happen in the new construction. Is a special, really special market that you don't have to waiting. You have to waiting only. It needs say I will waiting the delivery and to invest is a big mistake of your life. Again, free appointment with Esther to get an approval, because believe me, the price that we will get the approval at the moment that you make the reservation today, for example, let's talk about Pagani, that the time that you do the reservation today is not exactly the same that you are when the building is well built. So to be sure, because today you see the price, you just saw this price on this PDF. Believe me, that the price that is today is will not tomorrow. That's for sure.
Exactly. Tomorrow, it could, when the building is completed, it will be more than twice the price that is today.
Yes, and by the way, this building is you see this building is here. This building is a big tower just on the water. All the units is a corner unit that they have a view for all of them, all of them. So there is not one building that all the unit have a water view, unless this is really directly on the water with the marina just downstairs that you can enjoy. Here, just in front of the Norbe village that we will have, they are building just after with the Shomabe, if I remember, new Publix, big Publix. There is a lot of development over there in Norbe village. Is really, really amazing. You have to see, and go to my YouTube channel. There is several videos of the evaluation, let's say, with Norbe village. So let's explain Pagani and finish with Pagani, only to see. So you see, here, this is Noble Village. That is his two little island, and this is exactly the tower. Where is it? You know, so just on the water, these amazing towers that will hold the unit on the corner, of course, 3,000 on 2,000 square feet, like I was telling you. We can see just here on the map, just here on the point, and we are here in Miami Beach. So just right away, directly at Normandy Drive, and you are directly on the beach here, that there is a park. This is a Sabrina Park, if I remember it. And the Publix that you just, there is everything just right away. So this is the little marina on the side. You can find all the detail of this project directly on my website. I put it on the chat, my website, if you want to go and see more details. You can make the registration. You can download the detail, the brochure. It's completely free at the moment. The registration is free as well. And if you put some criteria on new research, you will receive a notice always when there is a property seminar that is popping on the market. So this one, this Pagani, first is Pagani. 11-foot ceiling on the whole residence, spacious terrace in all the residences. So all the apartments have a terrace, a balcony. Luxury, walk in the laundry rooms with full-size washer and dryer selection and correct finishes available, flooring, kitchen, cabinet, like you, because it's not common. All the unit will deliver it fully furnished, unique in every details. And you have on this building only 2 to 4 bedroom. There is no studio and no 1 bedroom. We are in the luxury building. This is exactly that the first one that he built 2 years ago, the 5775 Ocean, that there is only starting 2 bedroom. You never see really a high level standing building with a studio, 1 bedroom. Usually the building like that is really the five-star building starting at 2 bedroom. Let's right now and see the difference. So if I want to buy one property in the Rider, I have $100,000, or I want to buy one property in the Pagani. Esther, what's happened? How we do?
Okay, first, let's go to the other slide. Because this will help you understand what we were talking in a little earlier about the interest rates. This has shown you the trend that the interest rates per program have been since February 28 until yesterday, May 1st. So you can see it's go up and down, but that doesn't define anything, as we told you before, because first, at the moment that you will be able to be pre-approved for a mortgage loan in these pre-construction buildings, the interest rate will be completely different. But let's say you are interested in buying a resale property. So the interest rate is now, but in 2 months, in more than 6 months, when the interest rate goes lower, you can refi. That's the minimum time frame that you need to wait to refinance your property, 6 months. So after your 6 mortgage payment, you can refi if the interest rate is very lower. It's lower than the one that you have, and will save you about a minimum of $50 monthly. So let's go to the other slide. This is the rider. In this case, we are using the rider.
Yeah.
We evaluated as primary or second home. In this case, we use a second home, and let me explain you something here. For second homes and primary residence, right? For most of the people, in this case, that is the rider, right? We could use either a conventional loan or a bank statement loan. And I explained you this afternoon the differences in between. All conventional loans are all those loans that the maximum loan amount that the banks are able to lend you is $823,000 more or less in Miami-Dade County. That's the maximum. Every loan that is higher than that would go to a jumbo loan. So in this case, the rider, as of course you will have to pay a minimum down payment, right? That the minimum in this case, because it is a condominium, would be 25%. The loan amount is lower than the 823. So it will be 450 if you give 25% down. So it could go a conventional loan either for W-2 and self-employed borrowers. The point is that for self-employed borrower, you will have to qualify based on your income taxes, right? We use this 12 months bank statement because this is a non-QM loan. By the way, non-QM is non-qualified mortgages. All qualified mortgages are the FHA, conventional VA, USDA that we all know, and they are based, the income calculation are based in your either W-2 or your and pay stubs or your tax return or 1099. All these non-conventional loans are based, for example, in this case that we use a 12-month bank statement to to be able to buy this property as a second mortgage, as a second residence, were created especially for self-employed. Instead of calculate the self-employment income using your tax returns, we use the last 12 to 24 months, depending on the case, deposits that the clients have made into their bank accounts. There are banks that only allow to use personal accounts. There are others that allow to use us business account, and there are other banks that allow us to combine either personal or business account, because there are a lot of self-employed people that they don't have a business created. They don't own a company, and all the deposits are made into their personal accounts.
Okay, so this is the non-QM.
The non-QM bank statement, 12-month bank statement loan.
Okay, so you have only to provide the 3-month reserve required and the 12 to 24 bank statement, right?
Yes, that's the requirement for that loan.
Okay, got it.
So the minimum FICO is 620. So the bank will lend you either if you have no score or 620 FICO. But you have to remember that as less FICO you have, the higher would be the interest rate. So if you have a FICO of 700 and plus, your interest rate would be better, right? And in this case, you will need 3 months of reserves required. What reserves mean? The reserve are the amount of mortgage that you will pay monthly. You need to have in your bank account, along with your down payment and your closing costs, you need to have 3 months, the funds covering that will be covering 3 months of mortgage payments. That funds, the bank will not do nothing with them. They just want to see that they are sitting there in case you cannot pay your mortgage. But it's just that one. The banks provide a concierge service for income calculation. What does that mean? That when you submit your 12-month income bank statements, we send it to the bank that we will be able to work with, and then all those banks will calculate the income for you. So that way we can make sure that you qualify based on your income. And that way, when we provide you with a pre-approval letter, that loan will be approved because you qualify for the income, with the income, okay?
Okay.
So the bank will be able to lend you up to 90% of the purchase price, but depending on the property type. So for example, usually for condominiums, the minimum down payment is 25%.
Yes.
But in some cases, if the condominium that this new construction should have all the reserve and all the specifications with the insurance and everything, probably they could qualify for a lower down payment. So if in your deposit schedule is 40% or 50%, the bank, if based on the numbers and not just in your income, based on the condominium questionnaire, the bank will be able to refund to you the excess of the down payment required and the amount that you already provided as deposit. That's what that means. It doesn't mean that everybody would get a condo apartment with 10% down payment. It doesn't mean that that is the maximum amount that the bank is able to lend you, depend on the quality of the property, the requirements of the property, and your personal financial situation based on your income.
But you can go to 90%.
Yes.
Wow, that is amazing.
Yes. Yes.
That is amazing. So, I mean, we have under $500,000, right? So, percent it should be $50,000.
Yes.
So you mean that with in this situation, with your system and your knowledge, we can get a loan if we put 50,000 down payment for 450 with the balance.
Yes, if we put down 25% down payment, the loan amount would be 450,000.
Okay.
But if the property qualifies and your personal income allows you to repay that mortgage because it could be higher,
Of course.
right? You will be able to just put down 10% and the other 15% will be refunded to you
Okay. Wow.
at the closing. At the closing. Yes.
Okay. So you mean that the developer asking for 40% with some planification payment, scheduled payment. And but if my credit score, my income, if my situation is nice, can answer to the criteria or the requirement, whatever. So you can do 90% and return me back the 30% that I put more.
Yes, exactly. The bank will pay the developer the pending 50% and the difference between the 50% and the 10% that you give that you gave as down payment, it will be refunded to you.
Great, amazing. So let's continue.
But
Yes, sorry.
no, go ahead.
Okay, so let's continue. And now that is completely different because on the first one we are on the short-term rental, but you took the advantage, I guess, that this project can be residential and take the criteria that is more advantageable for the client, I guess, and second residence or second home for an investor, right?
Well, in the case of the rider, you can use it as second home or as an investment property.
Yes.
For both, you can use a 12-month bank statement as the mortgage loan product, but for investment, you can use as well the DSCR program. Which is the DSCR program? I have explained it several times. The DSCR program is that program that allows you to qualify the income based on the income that the property will be produced with the monthly rental.
Okay. And on the
But
other side, the Pagani is completely different because we are
yeah,
going now to the jumbo loan.
exactly.
So what is the jumbo loan? Let's go ahead.
Well, the jumbo loan, as we explained earlier, the conventional loan is the maximum loan amount that Fannie and Freddie Mac allows you to lend. That is, in the case of Miami-Dade, it could be 123,000 and something more, right? So the jumbo loan are all those loans that are higher than that amount. So as the sale price here, the lower is 2,900,000, even when the maximum the bank will allow you to will lend you would be the 70% of that amount. So you will need to put down 30%. So as the 70% is $2,030,000, well, it's higher than the 823,000.
This
That allows you the conventional. That is what this is jumbo loan because it's very big.
is right?
Yes.
Okay. Okay, let's go ahead. And
you have,
so the other side, yes.
yes, you have there the comparison between this in the same jumbo loan, but the difference is the amount of down payment that you will provide. The first column will show you the 30% down payment, which is the 70% LTV loan to value. That is the amount that the percentage of the sales price that the bank will lend you. And the other one, if you put down the 50%.
Okay.
That is the difference. And you can see the difference also in the interest rate. If you put down only 30%, the interest rate would be 6.5. And if you put down 50%, the interest rate would be 6.25, a quarter of a point less than the first one. The difference as well resides on the reserves. As higher the loan amount, more reserve you will need. The reserve, as I explained before, is the amount of mortgage that you need to have in your bank account just for the bank to see that you will be able to repay the loan.
And for you, your opinion, Esther, So the two situations that you explained to us, that is amazing. I love it. But what is better? I'm talking about I'm a resident, so I'm going to or maybe rent this property. And this typical property, I just get one on the similar property. Believe me, is $30,000 monthly. Believe me, I just one on property on the market. I'm talking about the two-bedroom. So I don't know if the price that you took it should be minimum two-bedroom or three or four. But I was looking for two-bedroom and it was for rent for $30,000. But under your situation on this one, maybe if it's for an investment or to live, what it is the better way? That it is to get to put 30% and get 70% LTV, or is better to get 50% LTV? What is the better advantage? Or there is no advantage, it depends only and obviously of your capacity.
Yeah, it depends. Even this jumbo loan is based only in the full dog. So full dog is based on your capacity to repay the loan.
Sure.
So either if you are going to use it as primary or as a second home, if you use it as a second home, it means that in some points you can rent it out, but you cannot rent it out the whole year. So because it's your second home, it's your vacation home. So in that case, you will need to qualify based on your personal income or on your business income.
Okay, both is possible. Okay.
Yeah, both is possible. It just depending on your capacity to repay the loan. Of course, as the higher the down payment, the less amount would be the mortgage.
Yeah, sure, sure. So is it
And if you rent it out in the other 6 months, 3 months, 4 months, whatever, that will just add an extra income for you,
that's you
right?
have, yeah, that's you have because we are in the new construction project. It's a little special that we should have a lease or a tenant, maybe a warranted tenant that he can get and lease the apartment at the moment that it will finish, or it can be just a project, a projection.
Yeah. Usually these projects are residential and they are not short-term rental. They are just allow you to rent twice a year
Yes.
because it's a second home.
Yeah,
That's
sure.
why.
Yeah. So, but if you want, if you have the goal to rent it out at the moment that the development is finished, that this is something that I have to say at the beginning, of course, but that I have to no make sense, but we don't know that I have to search and get a tenant, someone that say yes, I will rent it out when the project is finished, or you can just suppose that we get this amount of the rent is enough.
Yeah.
So
Go ahead.
what is the solution? You should have a guest at the end, a rental guest at the end, or you can suppose that this amount is I don't know, $20,000, and you can go ahead with the $20,000 that you can suppose to rent it.
Well, in that case, I will suggest the realtor that is working with that client to provide him a comparable of rents in the area for properties alike, because
Okay,
that will set up the expectations of what you could earn if you rent that property.
sure.
It won't be the exact amount, but you will have an idea.
Okay. Okay, sure. So you don't need to get really today someone that he will rent maybe your unit in the future when it's done.
No.
No. Okay.
No, because the price, the rental price that are today, there is not the rental prices that would be when the building is finished.
Exactly, too, because the rental price is going to, of course.
Mhm.
In this example, so you take this example for the 2.9, I guess, with the total
Yes,
square footage for 2,830, and for the two-bedroom, two-bathroom and half, right?
exactly, exactly.
Okay, so that you can just realize that the HO is very, very low, very low.
Yeah, for a building with this luxury,
Yeah,
let me tell you that most of the luxury is defined based on the 10 foot ceiling,
it's 11, this one.
and this one is 11.
Yes.
So you can see there's no many buildings in Miami with 11 foot
No.
from floor to ceiling.
Yes.
I
Exactly.
would guess that probably Bentley will have it, but I'm not sure.
I'm not sure.
I'm
See,
I'm not sure.
we have to check it out. Yes,
Yeah,
because one 11 foot give the
yeah,
apartment an amazing space, and
exactly.
sometimes they look like more spaces that it is. Because
Exactly.
for the ceiling.
hmm
So
hmm
let's finish with the jumbo load requirement and see. So this one, I don't even know. Okay,
Okay, the minimum FICO here is 720
so
because
five,
this jumbo loan is not for everybody.
of course.
You need to earn a lot of money. You need to have a successful business in order to be able to pay $15 monthly as rent, including the association,
Mhm.
right? So the income, as this program runs into full dog, the income would be provided as per DU. DU is the Dexter Underwriter, is the system that we mortgage brokers and mortgage lenders use to to know if the loan would be approved or not. They are based on Fannie and Freddie requirements. So all of the mortgage brokers and mortgage lenders will use this system, Dexter Underwriter or Total, which is the Freddie income calculation program to know if the mortgage loan would be pre-approved or not.
Yes, I'm agreeing. Completely.
So
Yeah.
gift funds are allowed. So if you don't count with all the funds to cover the down payment, the closing costs, and the reserve, uh, a familiar member can give you the other funds to complete that amount of money.
Yes, and
This,
by the way,
Mhm.
there is some system now that you can make a mortgage with a Bitcoin. So what I mean if you have whatever, let's say 100 a Bitcoin and you want to make a mortgage, you use 25 Bitcoin, you have 75 that he can generate interest and pay you monthly payment for the new loan that you can get. That is a amazing montage that I just saw not yesterday, but the day before. And I know that you can do it as well. So this is a really good montage because you can make a loan without take any money of uh, your money that you have at the bank, and you don't have to pay the monthly payment. You have to pay the monthly payment, obviously, but this is the interest of the other one that they give you for the first one. That is amazing.
Yeah. And these jumbo loans are for owner occupying and second home properties. In the case that this bank specifically that I used for this example, they don't allow investment property. Probably there would be others, but we will need to take a look specifically when the moment comes. For mortgage history, they require 7 years from bankruptcy, foreclosure, short sale modification, and for forbearance, 6 payments out of the forbearance are required. So the eligible property types would be single family residence, PUD that are the pre-constructions development, warranty condos, 2 units, um, acreage greater than 20 acres. We are able to lend in properties that has more than 20 acres, agricultural zoning and mixed use. And they are reviewed according to Fannie Mae on a case-by-case basis. It doesn't mean that all of those big properties with big size of land would be approved, but they will be reviewed on case-by-case basis. And this is in general, it's not just for pre-construction. This is in general for jumbo loans, right?
Right.
So eligible borrowers are US citizens, permanent residents with a valid social security card, Inter Vivos revocable trust. Because sometimes people can the title of the property could be an Inter Vivos revocable trust as well, and that could be a borrower. Instead of being Fabrice Hernandez, I'm the borrower, I want to apply for a mortgage loan, it could be Fabrice Hernandez Trust. That's what that means. And eligible terms would be between 15 years and 30-year fixed in this case.
Got it. So do we have all the requirements? That is amazing. By the way, if you again that the people that they want, this is the bonus that we can offer this night for everyone that is interested. You can take an appointment with Esther. Take an appointment directly. You can take it on the calendar. There is no problem. Or DM us only. And bonus, you can have an appointment and see the analysis and see what typical loan you can get, depending on the property that you're interested. Any question you can ask anywhere, anytime. If it's not today, because maybe the people don't have and the possibility to see this webinar, don't hesitate, leave your questions, send us an email, contact us with the QR code, and with a pleasure, we will answer to all your questions. But again, take an appointment. This is exactly the bonus that we have today. Is completely free. We will make an analysis one-on-one with you and see exactly what we can do for you to get the better investment.
And Faris, I just want to say that these requirements are the ones that will prepare us to be able to be pre-approved for a mortgage loan when the buildings are completed, because we already know it from now. So we have plenty of time to prepare to get the 720 credit score, to have the income if we don't have it completely, or if we don't have the funds to plan where and how we are going to get the funds necessary to complete these transactions.
This is exactly the point that is very important, and it's good that you put this one on the table, Esther, because sometimes people say, okay, but I have to more better credit score. I have to get more money. This is exactly, it's not to waiting the time that the building is done, that you have to start in to build your situation and your team. No, is when it's not that you have to do, because this is at this moment that Esther can telling you what you have to do. If you have to put on this one, put the money on this credit card, don't use this one, use this one. And like this, you will build some solid financial that is go directly through the project that you want to buy at the moment that is today, delivered tomorrow.
Exactly.
Thank you for all the explanation, Esther. We appreciate so a lot.
You're
And
welcome.
yes, so this webinar is recorded, so it will be online. Everybody can see it, and don't hesitate to the DM. At the moment that you see this webinar, you know that you have to send to us a DM, and we will send you first all the recording of the webinar, and you can have an appointment one-on-one with us and see the analysis with Esther, completely free. First analysis directly, completely free to see where you are to go if you want to make your investment. Thank you, Esther.
You're welcome. Thank you for inviting me again.
No, sure. So, and see you there for the next webinar.
Yes, of course. We're here.
Have a good weekend with the Formula One.
Thank you, you too.
Bye.